Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Tuesday, October 20th. Okay, it's 7:10 in the morning, and taking a quick look at markets, we are up on the futures about 0.75%, which is about a 50% bounce from what was lost yesterday. Most of the indexes were down about 1.5, 1.6%. So overnight futures have recaptured about half of that. And honestly, that's to be expected. We fell into some key support zones and are bouncing off of those levels. So let's see where we're at this morning and what we might look forward to today. What I decided to do is zoom out to the 4-hour chart on SPY and QQQ to kind of get a more broad look at the price action recently. A lot of times we get zoomed in on the 30-minute chart or short time frames for active trading, but I wanted to take a look at a longer time frame to give you a picture of what's been going on. And remember, the longer the time frame, the more important the signal. So it does pay, even if you're an active trader on short time frames, to know what's happening in the longer time frames so you can be in alignment with those trends. So here on the 4-hour chart of SPY, we've got RSI. We came out of the lows and moved into the bullish regime above the 50 line. And what I like to do is, being a technical analysis guy, I put trend lines on everything. So I've got a trend line here off the low, and you can see recently we had a trend line violation, which is, a heads up that something's changing. And now we're, threatening to go below the 50 level, which would again put RSI into its bearish territory. We've got a high level bear cross on momentum, so that favors lower prices. When we come down to the price action itself, we put in what could be construed as a double top. It's not perfect. We didn't, reach up to the penny to the prior high, which is, what you want to see in a classic double top, but it's pretty close. I'm not going to put a lot of stock into this, but it is something to consider down the road if prices were to head lower. So we came up, we got rejected at this level, and we've come down pretty quickly, and not in a straight line, but in short order. And we've come back to the original breakout area at 341.50. Excuse me. And whenever you come into a support zone for the first time, it's very common for price to stop on a dime at that level. And that's what we got yesterday. And now we've got the bounce this morning in futures. What I found interesting, I put the Fibonacci retracement levels here in purple. And what you see is the 38% retracement level aligns perfectly with that 341.5 price level. So that makes that level doubly important, because we've talked about, you don't want to see price come back into the prior range, because that would put all this price action, this breakout, in question. So we've got a bounce this morning. I would anticipate a back test, a retest of this level at 341.5. I find it hard to believe, although certainly possible, that we just, bounce from here and head off to new highs. I think at the very least, we come back. Maybe today, maybe tomorrow. A lot may depend on the news flow out of Washington with, fake deadline of you got to get a deal today on COVID relief or we're not doing it. I don't believe that. There, you know, for politicians, there's always tomorrow. So I wouldn't put, you know, I wouldn't stake my life on something getting done today. And also, Mitch McConnell has said that he plans to bring a $500 billion package to the floor of the Senate for a vote. So, conflicting messages as usual out of Washington. You know, I don't think you can trade around that. You just got to go level to level and see what happens. I will say it may be a reason to trade a bit lighter than you normally would. You know, you don't want to be triple max short when the news comes out there's a deal. You know, that's going to generate a big green bar, and you don't want to be wiped out in that type of a situation. So, you know, keep it light, keep it, you know, within your risk tolerance zone, and we'll take the news flow as it comes. So, but anyways, getting back to the chart, there's this large volume over price bars here that align really well with the 61.8 retracement level at 332. So if we end up breaking 341.50, the 50% retracement and the 61% retracement become important. And then, you know, our technical target moving back into this range is the bottom of the range. So, you know, between 332 and 320 would be, you know, within technical reason for a pullback once we pull back into the range, if we in fact do. But the thing I want to emphasize here this morning is be open to the possibility that 341.50 would be it. And if you think about it, breakout, back test, higher. Now I think we come back, like I said, but this may be it, and we may be off to, you know, new highs. So you can't do anything on the short side, you know, longer term until this 341.50 were to break. So let's look at the 30-minute chart just for active traders this morning. Your first level of resistance is going to be 344.50 and then 346. I would be inclined to try and fade those moves. I think this morning, again, we're going to have a gap up. I just think it's going to be too irresistible not for these guys to sell into. I find it hard to believe that they're just going to, you know, okay, gap and go this morning, let's go higher. Certainly possible, you have to be open to that, but I think there'll be, you know, a fair degree of selling pressure. Whether they close that opening gap or not remains to be seen, but I just think a gap open in this environment is going to be pretty juicy for these guys not to sell into. So find out where we open. I see resistance at 344.50 and 346, and then 347. If it reaches that level, that would certainly be a place to fade with all these reactions above. Those levels of support are now resistance, so that would be a level as well. Let's move on to QQQ. 4 hour, very much the same kind of look. Trend line violation here on RSI. High level bearish cross on PPO. We've come back to this 282.50 level, which I don't believe in coincidences. This is the 38% fib retracement level. So again, breakout, back test. Do we just bounce and go? Do we bounce and come back and hold and then go? or do we bounce, come back, and then fail? So those are really the only three scenarios that we have. You know, bounce and go, bounce, come back and retest, bounce, come back, retest, and fail. Really on this chart, I see 270 as the major level with this high volume over price bar here. If we got down to that level, that would be a critical level to hold, or else back down to the bottom of the box at 260. Looking at the 30-minute chart, there's a lot of stuff going on as far as intermediate levels on this chart, but let's try to simplify it. We've got a series of lower highs and lower lows making a well-defined downtrend channel, okay? And now we're at the channel low. So it stands to reason that, you know, if you had been short from up here, that would be, you know, a place to cover, and hopefully you did yesterday towards the end of the day, towards the close. Now we're bouncing with overhead resistance levels at 286, 287, and 289 would be the channel high. Now, I think these are all objective levels to try and fade, but if you really wanted the highest probability short available, you'd see if you got a move up to 289, and then that would be a place where it's more or less do or die. They either fade it there or they break out, and that's, you know, as objective as it gets. And really for the bulls, they need to take out 289 to break out of this channel and really get some traction back up to the upside. So that's an important level to mark on your charts. But today, I think as a second best level is 287, because you had all this support activity here, and then yesterday, as we discussed, spent several hours here deciding if it was going to break down. It finally did. So all this is now resistance, and I think that would be the place that I would be targeting for a first chance at a fade. And if you get stopped out, then your next level is 289. And if you broke 289, I would be taking it long for a push up to 290, 250, and then possibly even higher. I didn't go out to the 4-hour on IWM. There really wasn't a lot to see that we couldn't see here on the 2-hour. We had this well-defined top area where it couldn't break out above 164, and then yesterday, once this 162 level broke, it fell right back down to support at 160. So this is a much cleaner setup. Not a lot of interference here to, you know, contend with. It basically boils down to 162 and 160. Any bounce back to 162, I think, is an objective short with all this resistance overhead, and then it would come back down to 160. And then if 160 broke, odds favor coming back down to test the top of this gap and potentially, you know, fill it at some point. If things get all of a sudden real bullish, if there's a COVID relief package, I would expect IWM to pop 162, and if that happens, I would be getting long and looking for 164. And then if they break 164, that would be a place to either add or certainly raise your stops and look for 167.50 if things all of a sudden get really bullish. But one thing I wanted to point out is because IWM has been outperforming lately, its 38% retracement zone is all the way back here at 155. So it's at a much higher level than SPY or QQQ, which have been leading to the downside. So that would be a level to watch if, if IWM proceeded down. This 155 may serve as a support level here. And you can see, I don't have it drawn in, but it aligns well with these high volume over price bars. So that would be a level to watch if we fell down and filled that gap, etc., coming down. IWM 30-minute chart, basically same deal that we just talked about. We're here at support. We're bouncing now. That level 162, 162 and a half are resistance levels, and I would be looking to fade that with a move back down to 160. I think from a news flow standpoint, IWM may be the riskiest of the three, because I think, if there's some kind of breaking news on a big fat stimulus, $2 billion package, you're going to get, an outsized green bar on IWM. So, watch your position sizing. Just be aware of that. Don't get trapped, with a big max short position and get caught in that news flow pop. Let's move on to a couple trade ideas. I discussed this in last night's Market on Close video, but this REGI is in the alternative energy space, and that space has just been on fire, and I've been watching it for a while. It's basically locked me out. Either the advances have been so steep, uncorrected, that you either got to just step in and just close your eyes and buy and hope to God there isn't a parabolic collapse, or you sit on the sidelines and wait. And that's the mode I've been in, as painful as that has been, to watch that advance go on and on. But flipping through the charts, I found this REGI. Very nice controlled up channel, not as steep as some of these other names, but nice advance. Top of the channel, correction to the bottom of the channel. I like that. Bottom of the channel, objective place to buy. Also 50% half back long entry. You can see here I've got the fibs dropped in. Prices dropped right down to the 50% level. And if you go back and look at these pullbacks, that is a very common level. Either 38.2 or 50% are real nice retracement levels to get an entry on an uptrending stock. So I like that. The last thing that I like is price sitting on the 20 EMA right at 54. So I see three levels of support. I see the 20 EMA, I see the channel low support level, and I see a 50% pullback. I like this setup. Of all the charts that I looked at in the the alternative energy / solar space, this one to me has all the things that I like. I mean, it's in a nice uptrend, nice pullback, controlled, not parabolic. I think this is worth a shot, and I'd like to try and get long today against 54, 53, however much room you want to give it. But if it lost to 20 and lost this uptrend support line, I mean, that in itself would be a a sell signal. So I don't think we need to give it an incredible amount of room. So I think we can play it, be right or right out, is the way I look at it. So I really like that one. Another one that we've discussed is Draftkings. Had this breakout in advance that has since pulled back to key support where the breakout was. We've got an uptrend line here in key support. The reason that I didn't get long yesterday is because the IPO lockup expiration is today. I thought, discretion was the better part of valor, and just, wait till that clears. If I got to buy it $1 higher, that's fine. So we'll see what happens today, but I like this one long. I like the space. Do I like getting long when the market's wobbly? Not really, but technically speaking, I think we have a pretty tight long setup. You get long against 42.5, and if it fails, you're out. That's all you can say. But I like the space. I like the technical setup with the pullback to support, and even a move back up to the prior high. That's $20, and I'll take that all day long. Risk $1 or $2 for a potential of a $20 move. I'll take those odds. Okay, that's all I've got for this morning. I hope you found the information helpful. Let's do a quick little recap. We fell to key support yesterday, and now we're bouncing. I think that bounce will prove to be a little too irresistible right off the bat. I would expect some selling into the gap below. Whether they come all the way back and fill it, remains to be seen. I'd be skeptical of that first, green bar. I want to be, right now at least, looking to fade bounces into resistance. Why? Because the indicators are pointing lower. That favors lower prices. We're in a relative pullback mode, downtrend, and I think that regardless of the news flow, the price action says lower at this time. We have to be open to the possibility of, just a bounce and rip to new highs if there's some kind of news flow that would support that. But I think the odds favor at least a check back to the breakout level, which is 341.50 on SPY and 282, 280 on QQQ, and that's what I would be looking for, if not today, in the days ahead. Remember that VIX is up there now. It's close. I didn't check it how it closed yesterday, but we were pushing 30, and that's just not a great let's be long environment with the VIX pushing 30. If it were to drop back down below 27, down towards 25, the trend would at least be favorable. But 30 is getting up there, and anything above 30 is a real warning sign. I still think that there are these 1.5% to 2% down days out there, and that's what the VIX is telling you. So let's respect that. Let's not get out over our skis on longs and even shorts. I'm not trading heavy right now just because of the potential news flow reaction function that could wipe you out in one bar. So I'm trading a little lighter, just taking it easy here in front of the election, respecting the VIX, Still participating as best I can, but not going wild. And lastly, I think REGI and Draftkings, DKNG, offer nice objective longs within a tough environment. REGI is in a great sector, and I think Draftkings offers a good risk reward on a long. So if you're new to the channel, please subscribe. I hope you found the information helpful to set you up for the day, and hit the alarm bell and you'll be notified every time that I publish content. Over in the show notes are links to the blog site where you'll find a lot of informative articles and how to register for my content, so you get an email each and every time that I publish content. And lastly, I forgot to mention it, in last night's market on close report, I went through all the FANG names, Facebook, Apple, Microsoft, Google, etc., and gave the key levels on those. So if you're interested in those, nothing's changed, since overnight. I put a link on the blog post today to that video, and if you want, if you're already here on the YouTube channel, you can find it under the Market on Close playlist. You can catch up on those names if you missed it last night. So have a good day of trading. Keep your wits about you. Focus level to level. Stay objective. And I think you'll have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.